What up? So you know that throughout my journeys and everything that I've done, I do my best to be super transparent. And while last week we made really good money trading options and stocks throughout the week, a little over $2,000, starting off this week, we have taken some major L's. Major. We have lost a good portion of our portfolio. We didn't follow the rules that we put in place for ourselves, and that has cost us. Now, there's still time for my portfolio to recover, but right now we are down a lot more than I would like to be, so let's get into it. I am not a financial advisor. Trading and investing carry risk. Please consult a financial advisor in your area before making any decisions. I'm just a guy in a spare bedroom trying to build wealth. So right now we're at 11,300 and it is fluctuating heavily today because the markets are down, things are all over the place, everybody's uncertain. We were down to 10K a little while ago, which I haven't seen in a while, and that was scary. It's sad because overall, we were at 16,000 a few days ago, a couple weeks ago, right? And it's been fluctuating quite a bit, but 15K seemed to be pretty steady. You see, we've had some ups and downs. This all came from me not following my strategy, right? Not following the rules that I put in place for myself and gambling almost. I've almost gambled. I think these are good gambles still. I still think that there is a lot of hope. And we'll get into the one that's done it, which is Opendoor Technologies. I think this is going to explode. I really do believe in this stock. I got into it when it was like $4 and it shot up to $8. I made not a bunch of money, but I made some good money for my account size. And that's because they announced a new CEO from Shopify. Since he's came onto the company, he has done all kinds of hiring, also firing. So they've hired some great people from other companies. I think a lot of people from Shopify, if I'm correct. And he's put plans in place to really grow this company. And as someone who's always had a dream of getting into real estate, I kind of like this a lot because it's a real estate company, but it's technology based, right? Which really flows into my whole life, what I like, right? And with that being said, they're trying to change how homes are bought and sold in the world, really. And I like that idea because I think that our real estate system is broken. I think our real estate system is broken. I think there's a lot of room to grow and move it into the here and now. And this company is posed to do that. And with rate cuts coming and Trump pushing the housing market very heavily, they also are partnered with Lenore Homes, who just got $8 billion from the government or something like that. Anyways, to say all that there's a lot of fundamentals with this company that I really think that this could be a $20 stock coming up. They have earnings coming up. I really believe in it, but also it's been rough because it has been, the last month has been a steady decline, watching my portfolio drop. I still believe in the company, but I messed up because I went too over leveraged. I went too much into the company. And that's one of my rules, is not putting all my eggs in one basket. And I kind of did that with Opendoor, thinking that it was going to take off a lot sooner because it had some good news coming. But something keeps pushing it down. A lot of people think it's Jane Street. I don't know. I don't know enough about it. I've been in the market for a little while, but I haven't really studied a whole lot. I still think it's a really good one at $7. I think it's a great buy because it was trading at $8 for a long time, $9, as you could tell, and it started dropping soon. But this started after the market crashed last Friday. But I put too many eggs in this basket, and that's my own fault. So I've taken a big L this week. Like all the profits I made last week, gone. All that's gone. But we didn't blow our account up because risk management is important. I downsized my position to get out of margin because I was using margin as well. And I have moved into some other things. I heard about MP Materials from a guy named Keenan on YouTube. I think materials is a good one, especially with the trade wars and China talking about restricting materials. This might be a good one. I'm not putting a lot of money in it, but I'm watching it. We got Irene, which I don't know a whole lot about. I made a little bit of money off a call with them last week. Seems to be their price target is $100 by the end of the year. We'll see. I'm kind of watching this one as well. The next one is Cipher Mining, which, from what I understand, it's powering data centers, which I think is the future, especially with AI. Everybody using AI. Data centers are huge. Seen a great investor on X named Mike, kind of looking through his stuff and what he was saying and what he thought. And, I'm watching that. I got a couple. And Bit Farms as well. I've been watching for a little while. I've watched it go from 4 to 5. Did not hop in because I was scared. And that was a mistake because it has increased 50% in the last week. And that's what I get. But I don't know what I'm doing for the most part, right? Like, I'm trying to find companies that are doing things I believe in and invested in them. And that's kind of always how it's been. Like, charts and all these things, to me, it all don't make sense, right? Like, I see people make charts and it does something completely different. And it's like, how do you even know? So if I use the logic of like Warren Buffett of invest in companies you believe in, invest in stuff that you believe in, I think that's what really makes sense, because ultimately that's all a stock is a company. It's a business. You're investing in a business. You're giving them more money, capital, whatever. You're making them worth more so they can do more of what they're doing. So the fundamentals are super important. Do not emotionally trade. I have emotionally traded a lot here lately. And let's go through all the options calls that I have right now. This one, once again, another one that I just kind of dove into. At least we're broke even. Well, these are my calls that I sold, which I don't like how it shows that it's in red, but I'm actually up. So I'm up on these calls, which is cool because that was a little bit of extra income, because if you have 100 shares of a stock, you can sell covered calls on that and make a little bit of premium. And then if it goes up by the end of the week, if it's at that strike price, then you will have to sell it for that price. So I always suggest that if you're selling a covered call, make sure it's at a strike price that you're okay with selling it at. BMNR, another one that I am down pretty heavily. I have some time. So this one I've been thinking about, should I sell it and not lose all my money? But I still have a little bit of time, and I really believe that the market's going to kind of get back to normal within the next week or two. So I'm holding it, even though it's down a lot more than I would like it to be down. My open calls are down heavily, but I do truly believe in this company, and they have an earnings call coming up in November, and I really think the earnings call is going to beat expectations. So I think there's room for this to come back. We have some other ones, some $8 calls, $9 calls. This one isn't as bad. I was buying this on its way down because I wanted to make money, but it kept going down. SoFi is another one. I think they're about to kill earnings. I think this is still going to be a good one. And then we have rolled some of our positions. So I have 16 buys here. I don't normally buy 16 calls at once. I had different ones at different times, and I've just rolled them all into this, trying to hedge some risk. I probably could have let them ride a little bit longer, but I figure 850 on the 7th, that's after earnings, this should be safe. Another SoFi call that I bought when it was going down, which is why it's not down as much, because as the price was dropping, I was buying, getting calls, but things kept dropping. But I had the right idea that when I seen red in the market, I knew I need to move forward and do something else. Right now, it's not doing great. Bit Farms. I bought these calls a little bit further out because I really do like buying calls further out, just because it doesn't fluctuate as heavily, and as well as it gives it enough time for that company to move forward. These open calls, man, I really broke my rules on them, and the SoFi as well. Normally, I like to do at least 90 days out, and that's because it gives you enough time for day-to-day price action. Doesn't matter as much. You have enough time for everything to kind of get where you want it to be. So if something happens, like what happened Friday, you don't have to worry about it as much. I need to practice emotional regulation when I'm trading. I need to get it in order. Remember, this is a business and I need to keep it that way. And I need to focus on the prices that I want and not so much on being emotional, man. When I win big, I get emotional and I want to buy more because I want to win more. When I'm losing big, then I want a revenge trade. Like, oh, well, now I want to do this to make up for that. These are very bad things to do when trading. This is not an emotional game. I've let my emotions take over me over the probably last week, really, and it was the worst time ever. And this was something that taught me that, which I think is good because it costs me money, and that's where it hurts me the most. Is when I lose money. That hurts a lot. I'm not in the business to lose money. So while it cost a lot, I think it taught me a lot because I have to not make emotional buys or sells. So that's what we're working on, is just regulating emotions with this. This is another one that's just a random. It was really cheap. I think that might go up. It was BNKK. Sure Shot. They have a drink that's supposed to help you recover from alcohol, from being drunk or something. I don't know. It sounded pretty cool. It was super cheap. I put $50 into it. Another gamble. Probably shouldn't have done, but once again, this one's further out because normally when I do these things, I put them a little bit further out. I did sell a bunch of open yesterday, so I was too deep in open. I had too much margin going on. So I sold about 700 shares, I think. Yeah, about 700 shares of open at 728, which was another loss that I took, but I got myself out of margin. I hedged a little bit. I was just too deep into it, man. Too deep. I was getting excited. I was on Reddit and X, and I was getting hyped up and open army, all these things. And I did things that I shouldn't do. And of course, I sold it yesterday, and now it looks like it's starting to move back up. Story of my life. But yeah, I just want to share this because it's not all green. It's not all red. Obviously, I'm just a dude in his spare bedroom trying to figure this out, trying to give my family a life like we can't imagine. And the stock market seems to be like a great place to do it if you have a little bit of money to throw around and you're willing to lose a little bit of money, but not too much. So my goal for this week is to not be emotionally investing and to also hedge my losses, right? I want to get better at not losing so much. Also, I hope this pattern day trade PDT rule gets wiped away because you can't do day trading when you have less than $25,000. But the rule may be getting changed here pretty soon. And not that I really want to day trade, but sometimes when I make my options calls, they go up 30, 50% within a couple hours. And I would like to close those out and take my profits immediately and not wait till the next day and then risk the chance of losing all that profit. Take profits when you can. We want to grow the account. And what I would do is when it's going up like that, I'm going to sell enough to get all my capital back, maybe a little bit of profit, and then leave the rest and let those run and see what happens. Those would be my gamble after I get a little bit of profit, or at very least get my capital back, because capital protection is the most important. So don't follow me because I've not been doing that. But that's it, man. Keep working on the business, working on my health, working on the stock market, building wealth. Let me know what you guys think about these videos. Love y'all.